In the second of our two-part series, Retail TV talks with Gary Swon, Managing Director, Commercial Real Estate for Royal Bank of Scotland, about the future of the conduit loan business and what will drive business these next few years.
The next 4 to 5 years for our business will be very interesting. And in a cyclical business, it's very unusual that I have had a chance to sit in an interview like this and tell people that I'm very optimistic about the next 4 or 5 years, because we tend to be glass half empty kind of people that just go to bed at night worried about the next shoe to drop and the next market move. But the peak in our business and in the portfolio lenders too, from '04 particularly through '07, those were the biggest origination years that we have ever seen in commercial real estate finance. And most of those loans were written for a 10-year term. They're maturing now over the next 4 years. As we, as an industry, originated roundly 90 billion of conduit loans this past year. Over the next 4 years, on average, there are $170 billion of maturing loans. And the peak origination year of '07 was just under $300 billion. I think it was $292 billion of loans that were originated in '07. So this presents a lot of interesting opportunities. Certainly for us as a lender, the business opportunities are great because a lot of these loans are going to have to get refinanced and extended then for another 10 years. So the origination business for the future looks terrific. Unfortunately, those were also very aggressive lending days, and I have no personal opinion on this, but the pundits suggest that perhaps a third to 40% of those loans are over-leveraged, and they're going to need to be worked out, extended, perhaps recapitalized. So there are always winners and losers, unfortunately, I guess, in business transactions, but it will create a lot of transactions, both acquisitions, sales, recapitalizations, but a lot of lending business as well. So the next 4 years should be very busy times for our business. There are always events that could derail this recovery. And if I were to bet, it would be something unthinkable. It's some global capital markets event, some global political event that just causes the investors to go on strike, as we say sometimes, just say, I'm not investing during this period of volatility. And when that happens, we have no buyers for our bonds, therefore we have no loans for our customers. The fundamentals of real estate, commercial real estate, I think are very, very strong. And the values are solid. I just really don't see any adverse influences that may be falling upon commercial real estate. Occupancy levels are improving. Landlords are getting some pricing power to raise rents. Our economy is stable, and that's enough, actually, because we haven't had a lot of new construction, and stability in the economy seems to be enough to give us some good optimism for real estate values and cash flows. One of the biggest changes that we've seen in our business since the recession ended is the frequency with which CMBS lenders are able to come to market with new deals. In the old days, we would generally accumulate $3 to $4 billion of loans before we would securitize them and offer those investments to the investor community. And we would go to market 5, maybe 4 times each year. RBS has now done 20 securitizations since January of 2010, and we and others are in the market almost monthly. And the reason that that's relevant to owners of real estate and conduit borrowers is that frequency of securitization reduces the risk of our business tremendously. If we have a material capital markets disruption, that can cause our loans to become worth much, much less very, very quickly. And it can also cause us to have to revisit or reprice loans that may be under application and in closing but are not yet rate locked or closed. And the frequency of securitizations just compresses the time so much that it's far less likely for an event to affect the value of these loans that we're originating, and therefore less likely to affect the terms that the borrower has applied for and is expecting. So certainty of execution is the expression that we like to use, and the frequency of lenders going to market with deals has greatly improved the certainty of execution for borrowers who choose conduit lending as their option. It looks like the investor community, again, they kind of drive our business. If we can't sell those bonds, we can't make those loans. That universe seems to be pretty deep, and there's a lot of cash that needs to get invested. And from the higher rated AAA securities all the way down to the unrated higher risk securities, there's a deep bench of investors out there that want to buy commercial mortgage-backed securities. So even with this huge refinance boom that we're facing, we do think that there's plenty of capital out there to meet those needs. Well, there's just so much cash out there that's uninvested right now because rates are so low that many investors are a little indifferent between sitting on cash or sitting on treasuries paying next to nothing. So commercial mortgage-backed securities are actually considered by many to be a relatively high yield corporate bond type of investment. And I think that's why the demand has been so steady. And it's not so feverish that they're bidding up the price of the bonds. You know, the bond prices are pretty predictable and pretty steady, but nobody's had trouble selling the bonds that they've created. And it's not unusual to have new deals oversubscribed by the investor community. And so I think there'll be plenty of demand for CMBS going forward.
Retail TV is brought to you by Ferris Lee Investments, the largest retail investment advisory firm in the nation.